What's going on, guys? This is Chandler Smith, and in today's video, I'm gonna show you how to analyze absolutely any rental property in just a couple minutes. That way you can see what return it will give you, and that's gonna be able to help you decide whether it's a good or bad investment. So with all of that being said, let's jump into it. All right, guys, if you're new to the channel, I've been investing in real estate for the last 8 years. I'm 31 years old, and I currently own over $20 million of real estate. Now, I've had the opportunity to purchase almost everything. I've purchased single family homes, duplexes, triplexes, fourplex, 24plex, 32plex. I've purchased a lot of different properties that scale from 1 unit to a lot of units. And through that process, I started where, first of all, I had no idea how to analyze the numbers and determine if it was a good rental property. But once I figured it out, I've had literally hundreds, maybe even thousands of people come to me and say, Chandler, how do I do that? How do I run the numbers? How do I know if the numbers are good? How do I know if it's something I should purchase? I've kind of made it a goal of mine to make it as simple as possible so that literally anyone can run the numbers on a rental property and start investing in real estate. And in order to do this, I wanted to find the perfect app or spreadsheet or whatever it may be so that absolutely anyone could plug the numbers in and determine the difference between a good and bad rental property. And unfortunately, that app didn't exist. So I made one myself. It's called the CDS Rental Calculator, and it's available on iOS and Android. And I'm not trying to sell you anything. It's actually completely free. And the real reason I created it is I wanted anyone to be able to run the numbers on a rental property right away, just right on their phone while they're looking at the property or while they're negotiating, and be able to tell if it's a good investment or a bad investment. And in this video, I'm gonna show you how to use this app in just a couple minutes to analyze any rental property and determine if it's one that you should buy. So all you have to do is hop onto the App Store and download the CDS Rental Calculator. And I'm gonna show you how to run these numbers. The only thing that I ask you to do is remember to smash the like button, subscribe to the channel, hit the little bell. And if you download the app, just leave us a good review because I want everyone to have access to this. All right, guys, it's time to show you how to run the numbers on the rental property, and we're not gonna spoil a lot of the add-ons to the app till the end of the video. So we're just gonna show you how to run the numbers first. First off, up here, you've got your purchase price. Now, I'm purchasing this property at $700,000. However, they were willing to sell it to me for $630,000. That's what we'd negotiated to. But I did something kind of unique, and this is the first spoiler of one of the add-ons we've added to the app. If you go up here to cost to make rent ready, like let's say you've got to replace some windows in order to get this thing rent ready or flooring or whatever, you're gonna plug in a number in cost to make rent ready, and that's additional money you've got to put in to get this property rentable. That's going to affect your return because that's more money you've got to invest to be able to get whatever return you get. Now, what I did is I made it so that you could make this a negative number in the app because we've had lots of people ask for it, and I use this all the time. This is for instances like the one I'm talking about where you purchase the property for $700,000 instead of $630,000 because you're going to get $70,000 back from the seller. Now, this is something you can negotiate on commercial deals, and this makes it so that you can put a substantially smaller down payment down on the property. Now, the only hang up you might run into is if your appraisal doesn't come back where it needs to, but because I got a great deal on this property, I think my appraisal is going to be good, and now I'm going to have to bring a lot less to the table. So instead of needing to bring 25% down, maybe now I only need to bring 16 or 17% as a down payment. This is gonna make it so I need to put less of my money into the deal, and it's gonna put me in a place where I can get a higher percentage return when it comes to my cash on cash return. And keep in mind, if this is over your head, don't stress. It doesn't matter a ton. This is just a place where you can say, hey, I need to bring less to closing, or I need to bring more to closing because I'm gonna need that money to make renovations, or because they're giving me money back at closing. The next section here is your down payment. On this property, I'm getting it with 25% down, and then you've got your closing costs. Usually they're 1.5%, 2%. I've got it at 1.5%. I'm paying it off in 25 years. If you're 4 units or less, you should be able to get a 30-year AM. If you're 5 units or more, a lot of times they want on a 20-year AM, but I've got a good relationship with the bank, and so I'm gonna get it on a 25-year AM. It just spreads out my payments, makes my payments smaller so that my cash on cash return can be larger. Now here we've got the interest rate. We're running it at 3.6. My rents are $5,600. The next one is for vacancy, and I run that as 6%. I run maintenance at 12%, and I run management at 6%. Now here's the deal. Your management might be different, your expenses might be different, and your vacancy might be different. This all depends on what market you're buying in, what quality of property it is, how expensive the property is, how new the property is, how old the property is. There are lots of things that can come into play, but I'll tell you, if you run it with these numbers and you're in an average market buying a C or B property, these numbers should work good. Now, if you're buying a super ghetto property, you're probably gonna need more for your maintenance. And when it comes to your management, I've got a great relationship with my management company, and that's why my fees are lower. You might pay 8 to 10% on management, so you just need to be a little more aggressive with the deal you find, or you need to be okay with the slightly lower return, because it is worth it, in my opinion, to get a management company, or you might be managing it on your own. So these are good standard numbers for you to run in your market while you're learning, but the best way to understand your market and where these should come in is talking to someone that knows the market and seeing what their expenses are. Down here at the bottom, you've got a place to plug in yearly utilities, additional expenses, insurance, and taxes. Now, insurance and taxes are both things you can ask the seller, and they should be able to give those to you so you can get them head on. And when it comes to utilities, that's something that hopefully your tenants are covering, so you don't have to worry about those or additional expenses. Now, additional expenses might be snow maintenance, it might be lawn care, it might be a myriad of other things, maybe an HOA fee, and this is a great place for you to plug that in. Now, this might seem complicated or it might seem super simple. I'm hoping it leans towards super simple. There are just a couple of boxes you've got to fill in, and as long as you know the information, you plug it in, and then you're going to be able to see what your return will be on this property. All you've got to do is click run the numbers, and it's going to take you over to this tab. Now it's going to show you what the purchase price was, and then it's going to show you your total capital required. Now remember, this deal is unique because I'm putting 25% down. However, I'm getting $70,000 back in closing, and this has taken that into consideration. It now knows I only need $112,000 to put a down payment on this $700,000 property. That is awesome because that's a substantially lower down payment for me. Now, this first box is going to show me my net operating income. What that is you get all the money in from rents during the year, and you have all of your expenses that go out. This is what's left after the expenses have gone out, but before your mortgage payment. So you can see your debt service, those are your mortgage payments. And then here, that's going to show your cash on cash return. Cash on cash return is what I live and die by, because this is going to show you what percentage return you're getting on your investment. And I always like to buy properties with a 12% or higher. This specific property is a 13.45% cash on cash return. Now, if you don't know what cash on cash return is, essentially it's taking my total capital required. So any money I put into the deal, and it's figuring out what percentage return I'm getting on that money in the course of 1 year. So that's your cash on cash return, and then you've got your cap rate. Down here, you've got your cash flow after mortgage, expenses, everything. This is how much money I will net in my bank account every single year. And then you've got your principal pay down. This is how much you're paying down the mortgage principal. That's equity, that's money in your pocket. And so this is awesome. And then I added those two together to give you your total return. Now, total return does not factor in appreciation. I fought long and hard with this, trying to determine whether we should put it in there, but every year appreciation is different. It could go up, it could go down. Statistically, it goes up 3 to 5% every year, but with inflation right now, it should be a lot more. You just never know, and so I didn't want to include that in your return. And so you're getting your overall return just with your principal pay down and your cash flow. Now, the last cool thing here is you can see your amortization schedule. This is going to show you what's going to principal, what's going to interest on your mortgage, and how that pans out every month. And your principal is going to increase every single year and technically every single month as you pay this down. Finally, down here at the bottom, you have the ability to save or edit the deal. So you can go backwards and edit it, or you can save it. And this is the new feature that we added that I am so pumped about. We've had lots of you ask for it, and it actually cost a pretty penny to add this in, but I love it. So please use and abuse it. Again, the app is free, and this gives you the ability to save it. So we're gonna save this as 8plex. And you can save it for a couple different reasons. You can save like a good, better, best scenario for purchase price. You can save it changing the interest rates if you don't know what you're gonna lock those in at. You can save them with different rents. Or let's just say you're analyzing a ton of deals and you're trying to determine what you should buy. You can save all of these. You can save unlimited properties. So once you get 8plex, you press save. And here's the coolest part. When you click on the home, there the property is saved. And it gives you the ability to go in and resave it. So it'll bring you back to this page. If you click on that bar, you can either go and edit the numbers, or you can save it again and change the name. It's going to keep it how it is saved, but you can then change the numbers and save it as different properties. So that way you don't have to go and re-plug in all of the numbers. You can go in and manipulate it. You can play with the numbers. You can see what works. You can see what doesn't. And I'm hoping that this will help you to determine if this property is right for you or not. Now, when I'm trying to decide whether I should buy a property or not, I'm looking for a 12% cash on cash return in an area that I know is appreciating, I know is safe, I know is a C+ property or better, so that I know what kind of tenant I'm gonna be dealing with. My criteria might be different than yours, but this will give you the ability to plug it in and see what actual return you can get. And so as long as you know you're plugging in the right things, this is going to be a game changer for you, because now instead of going and meeting with someone and having them say, hey, I wanna sell the property, and you're like, crap, I gotta go home, I gotta find an Excel sheet, I gotta plug in all this information, and then I still don't completely know what I'm doing. This makes it simple, easy breezy, and I'm hoping that it helps you lock down a ton of deals quickly and easily because you know exactly what you're doing. Now, if you guys enjoyed this video, please remember to smash the like button, subscribe to the channel, and hit the little bell. And on the app, you can go, when you download the app, it's gonna give you the ability to accept notifications. I'm gonna give you every once in a while notifications on things that will help you to buy properties. But over here, you can stay up to date. It's got my TikTok, my YouTube, my Instagram, so that we can connect on all platforms. And if you love the way that I explained this, I do have a real estate investing course that right now is on sale for just $250. That's $50 off the standard price of $300. However, this month, it's jumping up to $500. So if you wanna learn how to invest, there's so much more that goes into buying a property than what we've talked about today. And so you can go and pick up that course and get $50 off, and technically $250 because the price is gonna be jumping up because we also revamped the entire course, and that's gonna be absolutely incredible. So pick that up now for $250 because the price is jumping up, but you'll still get access to all of the new things that we're adding to the course. So that's it. That is how you run the numbers on absolutely any rental property. And again, if you enjoyed the video, make sure to hit the like button, and I'll look forward to seeing you in the future videos where my goal is to help you to build a huge passive income. Thanks, guys.